Bob, great to have you on the show. Given the huge moves that we saw yesterday and the fact that it's been a pretty relatively resilient start to November, or really, I guess I should say going back into October, anyway, can we say that this is still a bear market rally, or is this potentially the beginning of a bottom here, or something more meaningful?
One of many good questions. We have to remember that bear market rallies are vicious. They're stronger than bull market rallies. I don't know that we've slain the bear yet. We still have inflation that is mid to high single digits. We still have how much will earnings come down? Are we going to have a recession or not? The whole debate about how far the Fed's going to go that you just talked about. Hard for me to say that it's an all clear sign, but I have to say yesterday's rally was obviously big in magnitude, but the breadth was pretty impressive as well. I think the jury's out. I had been, as a portfolio manager, slowly adding cyclicals and letting go some of those dependable stocks, HMOs, defense stocks. And the question is, do I need to quicken that pace? The jury's out.
Okay. So in light of that, what would you want to be seeing to buy into this notion that inflation has potentially peaked?
Well, I think inflation has peaked. I think yesterday, for anybody that was questioning that, the evidence is in. Doesn't mean every piece of it has, but overall it has. But we're still stuck with a 6 or a 7 handle, which is totally unacceptable. The Fed has more work to do. I think the debate you just covered is the right debate. They've raised rates at the fastest pace in history, and we know that the lagged effect on the economy from Fed rate changes is long. And so we don't know what the impact's going to be. I kind of hope they do, after 15 December, take a little pause, assess what they have done and what it does for the economy, and then we'll get some better read. I think earnings estimates have to come down, but I'm not convinced this fourth quarter rally is over. We had a horrible 9 months. Perhaps we go back to the 200-day moving average, as we did in the rally mid-June to mid-August.
And as the Russell's doing today, Bob, back above the 200-day since first time since August. Would you stick with that front runner, I guess you could argue?
Yes, down cap portfolios, I think, make sense. Those stocks are a lot cheaper than the big stocks. Their fundamentals are mixed, Carl, as you know, but I think leaning down in cap is quite okay for portfolios.